The subject actually utilizes some information, some knowledge from business technology. A few topics are linked to that. And some of the, which we call F1, used to call F1. And some of the knowledge it utilizes from your previous subject, that is F3, financial accounting. Some utilize it, knowledge means from that it utilizes. Now, the point is, what double A is about. Double A is basically 99.9% theoretical subject. 0.01% space I have left. I kept that. This for some calculations are there, a very few. Again, which actually those calculations are involved in the discussion again. Now, so when we talk about double A, audit and assurance, the subject, the syllabus, it has the one major section which is called audit of historical financial statements. Audit of financial statements. It is also called audit cycle. I call it audit cycle as well because it is repeated on each audit. So audit of historical financial statements, basically, it starts with acceptance of audit. Then comes the audit planning. Then comes audit planning and risk assessment. Then comes controls and test of controls. Test of controls are performed. Then comes substantive tests. What these are full-fledged sections of syllabus basically, which are also called substantive tests or procedures. Then comes review and finalization of audit. And at the end, there is audit report. So this is audit cycle or audit process. And this audit cycle or audit process, that is around 80% of your syllabus. 80% of the syllabus. Then comes the other areas. Other areas, for example, the area is which is introductory, assurance engagement. What is assurance engagement? And what is the need of that? What are the elements? What are the types of assurance? All these topics and a basic terminology is discussed in it. Then comes the regulation of audit, corporate governance, internal audit, And then comes code of ethics and quality management. So basically, these are all areas again related to audit. Nothing new in it, there is nothing exception. So they're actually governing the audit process, ensuring the quality of audit, the conduct and behavior of the audit, to monitor, to check, to correct, to ensure their behavior is appropriate. So these are other areas. And around 20 marks paper, sometime 25, is from there as well. So, students, we start our syllabus from assurance engagement, regulation. I will do corporate governance, although in the course plan I mention at the end, but I will do at the start. It's okay. So let us do some changing. Plan is tentative, okay? Then the corporate governance I will do. Then our internal audit. Then I'll come back and start with as per mentioned in the syllabus, in the course plan. Planning of audit, acceptance of audit, control, substantive, then this, and so on. Students, what are the resources to prepare AA? My course notes, volume 1, I will provide you during this week, within 2 to 3 days. It will be uploaded on the website. There will be 2 volumes of the notes because some mandatory updates are in progress. Final touch is there only. I'll upload that. Then comes the exam kit. My exam kit practice. Yes, which is we can call question practice, which is core part of this subject. Core. So, question practice, what we will be doing? Study hub, ACCA study hub. So OTQs will be done from these two sources because the paper has section A, 30 marks, OTQs. And section B, we will do from kit plus latest past papers. In exam kit, maybe latest 2, 3 past papers are not included. Section B, which is 70 marks. So we will consult past papers on the, again, exam platform, and we'll be doing that. Now, your syllabus, this time, first time I'm doing it. There are two phases of preparation. This is the first phase we are starting. We will be doing till control, means from assurance, insurance topic, regulation, corporate governance, controls. And then what will happen? This we need to cover in 1.5 months, I think, maximum. And then substantive will start. Remember, till first week of you can say 10th of September. We need to cover some substantive as well. Then from 10th September till 30th November, this will be tests period. Testing. Testing test plan I will share separately with you. Because attempting the test assignment and getting that marks and knowing where you are doing wrong. In theoretical paper, there is an issue. Remember, and this issue is very much important. The biggest threat. You know the concept, for example? You can analyze the scenario. You can discuss the answer. What should be the answer? But what examiner wants, there is a certain way to draft answer. For each scenario, examiner wants that answer should include a few certain ingredients. This is what examiner requires. So audit risk question, for example, you are writing answer and you are not writing the answer the way examiner wants, you won't get marks. You can say, Mr. Hamzah, I know everything. I have written everything. Okay, fine. Have written as per your own approach. Your logical discussion may be correct, but the way marks are distributed, assigned and allocated, if you are not writing answer as per that, this is the typical issue with AA and AAA, F8 and P7, with both these subjects. This is the issue. So, timely you understand it, the better for you. Okay? So this examiner approach. Now, so basically, there are 3 stages to prepare AA. What are those 3 stages? First of all is the conceptual knowledge of topics. And some of the points you need to memorize as well. For example, codes of ethics you need to memorize. Corporate governance best practices you need to memorize. Audit report types, under what circumstances they are given, that need to be memorized. And there are other small topics as well. You need to memorize. But you should be, first of all, conceptually clear. And then you must be able to application of knowledge to scenario. Application of knowledge, what you are learning, to scenario in exam. That this is scenario, I'm able to figure out things as per the knowledge gain. And then this is what again I am telling, demonstration of application as per examiner guidance. If you do only these two and you do not demonstrate as per their guidance, sorry to say, students, if they do this, they fail in 40s. Whoever fails in 45, 46, 47, even 43, 4, normally, in majority cases, they lack here. So demonstration as per. So three steps. One, two, three. These are mandatory. Now, if there is any question, you can ask before I proceed. Yes. Yes, please. Do ask. You can open your mic, talk to me even. Lecture plan, when you log in on the portal, there is notes and there, click the notes inside, there will be lecture plan. I can show you. Let me share it here as well. So otherwise you can find it there. Let me share here in the chat box. I hope it's okay. So let us proceed further. So we are starting with the first topic, assurance chapter. Students, there is a concept of agency relationship. What is agency relationship? What that is? Agency relationship is a relationship where one party acts on the behalf of another party. One party acts on the behalf of another party. So the party which is acting on the behalf of another party, this is called agent and this is called principal. So I ask, for example, I ask Mr. Hamza, I ask another person, Mr. David, that go and buy a piece of land in the north province from Lexpress Property, a property company. Now, David is going to negotiate on my behalf with Lexpress Property. So David is agent. David is agent. And Hamza is principal. So now it is the responsibility of principal agent. So agent, so this relationship is called agency relationship. This relationship is called agency relationship. The agreements which are done by David on my behalf, they are binding. They are binding on me. Now, student, agents, Mr. David. So his duty are he is working on my behalf. He has to disclose all information to principal, to me. Whatever he deals with, Lexpress property, he must disclose that to me. And David must act in the best interest of principal. He is making a contract with the other party. So whatever dealing he performs, that should be in my interest, for my betterment, for my welfare. He should not be biased toward his. For example, he may say that David is going to buy property from Lexpress property. Lexpress property says, okay, property has value of 20 million. So David say, okay, do one thing, charge 21 million and give this extra 1 million to me. Mr. Hamzah will pay you 1 million. So David is abusing his position. He is drawing his own benefits. He is having conflict of interest with me. He is representing me, but not working in my interest. So David, or which is called agent here. So agent must disclose all information to principal. He must act in the best interest of principal. Now, these are two responsibilities of agent. These two are called fiduciary responsibility of agent. Fiduciary responsibility. So what is fiduciary responsibility? To act in the best interest. Fiduciary responsibility to disclose all information. Fiduciary responsibility. And agent must do that. But if agent does not do that, there is risk that agent may not fulfill this responsibility. They may be drawing, withholding information, important. They may not be disclosing all facts. They may be drawing their own commissions secretly, unethically. So fiduciary responsibility may be breached. And that situation is called agency problem. What is the next concept? Agency problem. That agent may not act in the best interest of principal. That's a possibility. Now, next point. Students, let us talk about company. A company, it has shareholders, it has directors. So directors are agent of shareholders. They run company on their behalf. So they must have to disclose all necessary information. They must have to disclose all information to principal shareholders. They must act in the best interest of shareholders the whole year. Their wealth is with them. Investment they are managing. So at the end of year, what happens? Directors prepare a report which is called financial statements that we have done this for you. These are the profits for you we earned. Sales, costs, everything is there. These are the assets, these are the liabilities. So directors do at year end, they prepare financial statements and they disclose it to shareholders. Principal. No, agent has to disclose all information which is relevant to them. Now there is a risk that. What is the risk? The directors make these financial statements because it is, in other words, financial statements are, we know that, they are performance of business, right? So in fact, that is performance of directors, what they have done. No? They are performance of business, but in fact, they are performance of directors, what you have done. So there is a risk that there is a possibility that directors may manipulate financial statements and present things in a way which are good looking, which are not actually reflecting the business affairs, which are just boosting on the paper only that the business has grown. And in fact, things may be different. This is possibility because directors want to show their good performance. This is what they want. Everyone wants. Now this is an era of show off. You know very well. So this is the problem that the shareholder says, okay, these directors have brought these financial statements in front of us. Can we rely them blindly? No, we cannot. They are biased. They might not be showing the true picture of business to us. Just to get their bonuses, just to secure their job, huge salaries, they may have prepared and cooked financial statements, window dressed financial statements, using different techniques, accounting techniques, creative accounting, false, fraudulent techniques. So now here comes, due to agency problem, again agency problem it is. Directors may be doing that. Here comes the need of A finance expert who must be independent and competent, who must examine financial statements and report on the credibility of financial statements. Here comes the need of finance expert. That there must be some independent finance expert with knowledge, competent, who should check financial statements and report to shareholders. Tell them that financial statements are showing true and fair view of company affairs or not. Now, and that whole process, this one, this is the job of the auditor. And audit, what audit is? This is audit. Now, let us proceed further. So we have learned one thing. So when auditor will give report on credibility of financial statements have been prepared correctly, they show actual picture of business. You may have heard the word true when they say financial statements give true and fair view of company affairs. This is the wording of audit opinion. So true and fair view. This word is very much important. Student, just catch up true and fair. Financial statements are reflecting the actual circumstances of business. This is the meaning of the sentence. So auditor is certifying. Financial statements are showing what is actually happening in the business. The current status, the current situation, circumstances of the business. Now, so let us proceed further. So now if anyone asks you that what is the role of auditor? Now if someone asks you, what should be your response? What is the role of the auditor? What is the duty of the auditor? So there should be one straightforward, clear answer, that to report on credibility of financial statement of company. Whatever you have learned before, the idea before, you erase that. The duty and the job of auditor is one. This is overriding duty to any other duty. Other duties can be part of his job based on contract. But there is one truth holds true everywhere. What that is? that auditor's duty is to report on credibility of financial statements. Now, so let us proceed further. Then comes the stewardship relationship. What is the stewardship relationship? That is the relationship where it is basically the concept is derived from agency relationship. It is derived from there. So stewardship relationship where one party deals with assets of another party. Where one party deals with the assets of another party. That is called stewardship relationship. And we know that directors are stewards of shareholders' assets. They are dealing with them throughout the year. Now the point is they are stewards. They deal with their asset. And then next, once they do that, at the year end, they have to fight to prepare a report that how they have used the assets. That is called stewardship accounting. So financial statement has another beautiful name, that the report on use of assets by steward. That is called stewardship accounting. Now, let us proceed further. So we have learned that what audit is, that is independent, competent person examines financial statements and report on credibility of it. We know, we have learned that. Now, audit is mandatory or not? So statutory audit and non-statutory audit. Statutory audit and non-statutory audit. What is statutory audit? Where statutory audit is that audit which is required by law. So those companies for which audit is required by law, that is called statutory audit. All listed companies, majority of the big private companies, charities, trusts, normally they are required by law to conduct their audit. Banks, so their audit will call statutory audit. And non-statutory audit, what it is? That audit, so So audit of organization not required by law. Still they conduct audit. Partnership. Small companies which are exempted for audit. Sole proprietorship. So their audit is called non-statutory audit. Partnership as well. So what are the benefits to them? Why do they conduct audit? My question from you, why do they conduct audit? Then it is not required by law. They conduct audit, the benefit, public confidence is enhanced in their operations. Public confidence. Tax authorities' confidence is enhanced. Funding become easier. They can, if they can audit their financial statements, it is easier for them to raise funds for their business. It becomes easier for them. Otherwise, it is not easy. And if it is a partnership, so ease of settlement of account. So partners have to, different partners, they have to distribute profit or loss or whatever it is. So if they conduct their financial statement audit, it will become easier for them. So four just came to my mind, I have discussed, maybe more even, 2, 3 more you can write if you think. Since you are, yes, chances of non-compliance risk is reduced. Reduced. Because you are getting everything audited. So auditor actually reviews non-compliance of company. So of course, when your system is being reviewed, so chances of non-compliance is reduced. Now, next. Students, the next topic we are going to start, that is assurance. Engagement. Or services. Assurance. And I normally give a famous example, which everyone can understand. Because we all deal with such situations during our life. The situation is that, for example, there is a student named Madiha. She needs to buy a car. And she wants to buy a car in the price range of 1 million around. 1 million rupees. It should be comfortable, in good condition, non-accidented. Means this is her demand. So Madiha is actually is scrolling the Facebook. So Facebook Marketplace, there is a car posted by a student, Lakshana, that she wants to sell her car, that is Toyota Vitz. Okay, the price is brand new car, it is slightly used. The price is 900,000. And she claims it is, you know, drive one only a few thousand kilometer, very good condition, non-accidented. Now, tell me, whatever Lakshana is saying about this car, Madiha should blindly rely that and accept it. The question is, should they do that? No. And Madiha is not expert in it to check. And even I own a car since decades. Okay, last 20 years, for example. But I even can't check that technicality things. I may get, you know, deceived. So Madiha actually goes to a service called Toyota Shore. It is a service by Toyota. They are experts in their job. Madiha goes to them, they say, I'll pay to you. Check this car for me. So I'll pay the fee to you. That it is non-accidented, mechanically good, and So Toyota Shore actually evaluates the car. They perform work, obtain evidence, check everything. They start, engine sound, they apply the scanners to it, examine the whole body with some machines. And after doing that, now Toyota Shore, after doing that, they report to Madiha. The the condition of car. Now tell me. Now the decision making has become easier for Madiha, isn't it? It has become easier. That whether to buy this car or not, it has become easier for her. So, confidence of Madiha has increased about this prospective transaction. And this confidence has been given by this report of Toyota Shore. So, confidence, the whole purpose of this exercise is confidence enhancement of user. This is called assurance service. And Toyota assurance engagement or assurance service. Toyota charge fee for that because they are the expert. Now, listen everyone. Madiha is intended user. Toyota Shore, they are practitioners, expert knowledge. They give report, they obtain evidence about this item, which is called subject matter, to be provided by who has to provide it? Lakshana. Responsible party. And this is the core. The whole exercise is for this purpose. So we have learned assurance engagement. So basically, assurance engagement is there are three parties. Tripartite relationship. Three-party relationship. Who those three parties are? Sorry. Practitioner, practitioner, responsible party, and intended user whose confidence has to be enhanced, who is ultimately using the service, who has to make a decision. So the first thing. Then there is a subject matter. Then there is a criteria. Car has to be checked. Car, subject matter was car. It has to be checked against standard benchmarks of quality. Then they say, okay, this is optimum quality. This is 90% okay. This is 60% okay. Then there is, after work, they obtain evidence. They check and obtain evidence, note down everything, and they give a report. So, CREST, CREST, these are elements of assurance engagement. These are elements of assurance engagement. Now, three-part practitioner. Now, let us apply it to audit. Audit is also assurance engagement. And who is the user there? Tell me. In the audit process, who is the user? Tell me. User of audit report. You will respond. Be quick. Be quick. Be quick. One answer received so far. Who is the user? Exactly. Shareholders. Exactly. So auditor is practitioner. And responsible party is directors. And what is subject matter there? Financial statements are checked by auditor. And criteria, they are checked against IFRS, laws and regulations. They obtain evidence and give audit report. Now, so these are elements of assurance engagement we have learned. Students, let us proceed further. So assurance, another type of assurance, let me tell you that this is Mr. Hamza, and he wants to deal with a person, the name is Robert, living in Cupip, and Hamza is living in Lahore, Pakistan. So the business dealing is being negotiated of amount around 5 million rupees, for example. Now, I do not know Mr. Robert. So I ask a student of mine who lives there in Cupip, and the name is Ashraf. I say, Mr. Ashraf, do a favor for me. Okay, get information about Robert to me, his credibility, his repute, his history. Now, this is again, Ashraf will go work and bring me report. Again, that will be a type of assurance. Now, let us continue with this example. So Ashraf goes and gets information about Robert from 4 to 5 sources and comes to me, Mr. Hamza, I have performed the task you wanted me to do. Say, okay, what is the report? He says, okay, I didn't find anything bad about Robert. I didn't find anything bad about Robert. I say, okay, but I'm not. How many sources you get information from? He says, I gathered information from 4 to 5 sources. I say, Mr. Ashraf, more information. Can you please? It is a matter of my life saving. Can you get more information? Now he goes again and gets information from now 4 or 5 more sources, so total 10 sources, and comes to me and says, Mr. Hamza, Robert is a credible person. So Robert is a credible person. Now tell me, I didn't find anything bad about Robert, and Robert is a credible person. What is the difference? Is there any difference between the statement? Tell me. Tell me, please. Is there any difference you feel? What do you think? Yes or no? No response. Response is must. Very good. One answer is very good. More answers needed. Everyone should be involved. Everybody should talk. Some students they send message me privately, so I keep reading their answers. Okay. So the difference is level of confidence. This is the difference between the statements. Here is the less confidence. Here is high confidence. You may have asked someone, you may have asked someone, I want to study audit and assurance. You say, Mr. Hamza, he's very good. For example, they have said to you. Now, confidence brought you here. My majority students come on referral basis. That's what I'm telling you. So, the point is, this is confidence. If they say, "Oh, I don't know, he is not bad. Okay. You would not have chosen it. The confidence level. Thank you, Lushika. So, confidence actually helps you to make a decision in a better way. So, here, assurance and confidence comes from more work. Write down somewhere in your room as well. The confidence comes from more work. It holds true in all walk of life. So in assurance, more confidence means more work. Less confidence means less work. So this is a high level assurance. So high level assurance and body language wording is positive wording in the report because you are more confident, more work is done. That's why I ask my student when you are preparing for exam, if you are not over prepared, it means you are under prepared. Yes. I normally ask my students. So the next point is less confidence, low level assurance, negatively worded, although they are not talking against, negatively worded, less work to be performed. Less work to be performed. So high level assurance and low level assurance. High level assurance, that is called as reasonable assurance. And this is called, when it negatively worded, it is called limited assurance. So reasonable assurance and limited assurance, two types of assurance we have studied. This reasonable is a high level. So once again, why the level of assurance is different? Because of the work rigor, work intensity, amount of work. So the difference is because of amount of work. If you increase the amount of work, it become reasonable assurance. If you perform lesser work, it become limited assurance. Now, so reasonable assurance and limited assurance, we have explained. So continuing with the same. So this line is, you should write somewhere, prominent. So reasonable assurance. When auditor performs work on financial statement, high level work, checks that the auditor gives reasonable assurance. And that is called audit of financial statements. What is audit of financial statement? Is reasonable assurance. Because high level of work is performed. But if same work is of lesser intensity, lesser amount of work, that is called review engagement. That is called review engagement. Now, next point. The next point is, students, now wording of audit report. Financial statements give true and fair view of company affairs. Positively worded. And here in the review engagement, what is that? I will give you example, don't you worry. You may have heard this word first time, review engagement. But I've given you idea, lesser work is performed. That's why it is not a call audit. Work is similar, but extent of work is low. So review engagement. What is the wording? Nothing has come to our attention that causes us to believe that financial statement does not give true and fair view of company affairs. You see here, negatively worded sentence. Why negatively worded? Because the level of confidence is low. Level of confidence is low. So let us proceed further. So review engagement, its examples. I told you what is review engagement. So let me give its definition as well. Review engagement is a type of assurance where work is performed of audit nature, but which does not constitute an audit. Which does not constitute audit because amount is less. Nature of the work is same. Now, the next point is, so example. What is the example? Review of cash flow forecast. Companies, when they apply for loan funding, they need to prepare next 12 months, 1 year, 2 year, 3 year forecast. This will be the every month cash flow. And if they don't, and if they have to prepare it, then they have to get that reviewed by auditor, and a review report, limited assurance report, is given by auditor on it. So review of interim financial statements. Company produce quarterly financial statement, 6 month, for management purpose. So even that is again reviewed by auditor. I hope it is clear. So review reports. Two types of assurance we have studied. A third, student, we have studied the types of assurance services or assurance engagement. We have studied reasonable assurance and limited assurance. There is another type of assurance that is called absolute assurance. Absolute. Absolute assurance is called guarantee. 100% assurance. Absolute assurance, 100%. And you know that auditor cannot give absolute assurance on financial statements. Auditor cannot give absolute assurance. Why? Because auditor perform tests. Why? Guarantee. The one is sample-based testing is done by auditor. And there are, audit is performed, there is some probabilities and judgments. So many involved. Persuasive, that I get high balance of probability, high probability this is correct. Some item you cannot be certain 100% because the whole year transactions and item you are verifying in few months. So absolute assurance is not possible. Now, students, so three types of assurance services we have talked about. Now, focus. Types of work or services by audit firms. One, they are called assurance services. Secondly, they are called non assurance services. Now, non assurance services, assurance services we have talked about three types, not going again into its detail. Non assurance services, where no confidence enhancement of anyone. Here it is confidence enhancement is done. Two types. One is called compilation engagement. Here it is called agreed upon procedures. Compilation engagement and agreed upon procedures. So compilation engagement is that way where audit firm they compile data in a certain way. For example, tax return compilation. Preparation of accounts as well. They do. They prepare return different type to be filed by a company. So no assurance. Just doing the work what is decided in a certain way. Nothing beyond that. They're just doing that. So agreed upon, so compiling, arranging data, reports in a certain way. Agreed upon procedures. They are facts finding engagements. A fraud occurred in the company, they ask auditor to investigate fraud, quantify amount of fraud, identify the fraudsters. So forensic audit, fraud investigation, you can write, sorry. Forensic is not here in your syllabus. Fraud investigation is better word. Fraud investigation. Analysis of sales. Prepare that, find which department is underperforming, which product is underperforming. Okay. So that is called facts finding engagements. And there is no report, no assurance, no confidence enhancement. Now, students, just 5 minutes break. I normally take in between the class. 5 minutes. Okay. I'll be back and we will continue we have to cover very important topic. Okay, today. Regulation of audit we have to study as well. So in 5 minutes, we'll be back. Thank you. Yes, students, now. So, we are going to talk about a few terms. For example, you have studied this statement again and again that financial statements give true and fair view in all material respects. So, in order to make you understand, I want to give you an example. And the example is very interesting. All of you use Instagram, probably. One of your friends is actually having crush on another person, which is on Instagram. And your friend is following that person on Instagram. And whenever that crush posts a picture, your friend goes and give heart react. Okay? And comment. Wow. So, and you know that your friend talks about that person with you. Case one. Case one I'm talking about. One day you are sitting in Triano food court and you all of a sudden you notice who is sitting on the next table. And you ask your friend, see who is there, your crush. And your friend simply when sees that person in person gets disappointed. Say, oh my God, huge difference. What the pictures are showing on Instagram and what the person is, there is a huge difference. Oh my God. Filters has shown their have done their task. Got it? So you're actually the point is the pictures on Instagram does not give true and fair view of that person. True and fair view. Pictures on Instagram does not give that. Now, listen. On the other hand, case two. So true and fair view. Got it? There is huge difference. So they do not give true and fair view. Pictures do not give true and fair view of that person. Another example. Same case happens with another friend and the crush is, you say, oh, nice. Only slightly different. It almost looks the same. The pictures. What the pictures show? Almost no big difference. The actual person and the pictures. So this is what statement is. Financial statement give true and fair view of company. So financial statements, now come to the audit. Come back to the audit. Financial statements, already saying, financial statement give true and fair view of company affairs in all materials. Material means significant. Significant respect, it is same. So The point is true, fair. Thank you. So true view and fair view. What is now technical meanings? When auditor says financial statement give true view, which means information in financial statement is factual. Information is factual. Conforms with reality. True means information is factual, conforms with reality. Financial statements correctly extracted from accounts. So when auditors say financial statement give true view, the word true has this much embedded meaning. Factual, this is factual. Reality, correctly extracted. Fair. Fair means unbiased information. Unbiased. As per relevant standards and rules. For example, if there are IFRS applicable, they are as per IFRS. And represent commercial substance of company transactions. And they represent commercial substance of company transaction. Now, what does it mean? Commercial substance. Commercial substance means that reality. The transactions are actually taking place. They are not just in the books. Sometimes company record sales, costs, etc. And they may be fake sales, fake costs, just to boost figures. So that's why it is being said they represent actual commercially what is happening over there. They are not just in the books. Let me give you example. The company in books of accounts, the company sells the car to someone. Transaction is showing car has been sold. But commercial benefit, company is still using the car. As per contract, company will be using for next 12 months, next 20 years, company will be using. It has been sold, transferred in the name of some other person. But who is using the car? Who is actual beneficial owner? Company. Commercial substance is otherwise. Legally, it has been transferred. So, fair means the business should be shown, financial statement should be shown on the commercial reality. Legally, you can manipulate things. What actually is happening, that should be written over there. That should be reported over there. So commercial substance is clear. Another example, same, similar example. A house is in the name of some, it is in my name, house, but it is in the use of my maternal uncle's family, Mamu, we call it, since last 30 years. They are not paying any rental. They are using it. So what is commercial reality? They are the owner, not me. Got it? So commercial reality is important. Commercial reality, substance. That should be represented in the financial statements. Now, so students, true, one thing is missing here. In the true, information is as per laws and regulations. Yes. So true and fair means this. This is the meaning of true and fair. Now, the next point is materiality. What is material? Materiality is always, it is the relative significance of information item in a particular context. Relative significance. Significance is always relevant. Rupees. Okay, let us talk about in dollars. $2,000. Significant or not? So the person who has total wealth or okay, monthly salary income of $5,000, it is significant. And the person who has monthly income of $5 million is not significant. So significance is always relevant. Okay, let me give you another example of you get salary start of month. For example, your salary is 50,000 rupees. And the salary day and the next day, you go with the party with the friend and you spend 1,500 or 2,000 rupees on party, outing, food, okay, recreational trip to the Kazela, for example. And it is on the second day of salary you do second day. Kazela park, a park is there. Okay. So the second day of salary you do, days pass by, 3 days before month end, you have 2,000 rupees in bank account. Would you spend this amount the same day, one day on a trip? No. Why? Because these circumstances have changed. Same person. Situation has changed. Now 2000 is important, significant. So similarly for companies, what is material? depend upon, first of all, which company we are talking about and what are their circumstances. That's why materiality is always relative. You may have studied a definition, and that's also correct, that anything, the omission or misstatement of which in financial statements affects financial statement users' decision, economic decision. So decision is always based on circumstances. If I get to know the Coca-Cola is facing a loss of 100,000 rupees in one contract, I say, oh, Coca-Cola, not a big deal. Is it a news? But if I get to know this such news for a small grocery store, oh my God, I may not invest there in that smaller grocery store. So relative significance. Now, the next topic is regulation of audit. Audit is regulated, controlled, monitored, guided. How audit is regulated? So regulation of audit is done by two sources. First of all, national laws and regulations. National laws and regulations. The second, IFAC. So first of all, national laws and regulation. They define eligibility criteria for auditor. What is the qualification? Note down this point. Qualification, experience, training, code of conduct. What they need to comply with. So national laws and regulation, they define. They define. For example, what will be the recognized supervisory body in the country? Supervisory body, RSB. ACCA is a recognized supervisory body. ICAW is a recognized supervisory body. In my country, in your country as well. Might be. Some may not be. ACCA is not in my country, by the way. Okay. But in UAE, everywhere it is, because of here, some sort of political. Yes, you can say that. Now, so recognized supervisory body. So IFAC. What is IFAC? Okay, sorry, one thing I missed. Yes, national laws and regulation tell appointment, removal, rights, obligations, which is called duties, all related to auditor. They tell that. They tell that. We need to study it, of course. Then comes the IFAC. It is International Federation of Accountants, IFAC. Accountancy bodies, majority of the world, they are member of it. ACCA is its member. ACCA is member of IFAC and so many others as well. So IFAC has multiple subcommittees which actually guide the conduct of auditor, control, in other words. So we are studying control, supervision, monitoring of auditor. So IFAC has a subcommittee, IAASB, International Audit and Assurance Standards Board. This is subcommittee of IFAC. What does it do? It issues, revises ISAs, International Standards on Auditing. Guidelines, what are ISAs? How to perform audit of financial statements. It issues ISQMs, International Standards on Quality Management for audit. How to ensure quality of audit. And it issues multiple other standards as well, which are not part of our syllabus. So IASB, basically, it is subcommittee of IFAC. It issues all these guidelines which need to be adhered by ACCAs, ICAWs as well. Now, second, another subcommittee of IFAC is, that is IESBA, International Ethics Standard Board for Accountants. For accountants. Codes of ethics, what you study, they have issued basically. And they keep improving that. They issue, improve. For accountants, how they should behave. Now, come back. Appointment and removal of auditor. Talk about it. Appointment of auditor. This is the last topic for today. I will end class today because you don't have notes. You will get notes, and of course, we will make up this deficiency. So, appointment of auditor, first right of shareholders. They appoint by in annual general meeting of shareholders. They appoint it by voting. By directors in two cases only. Only in two cases. First auditor of company. The company newly formed, the first year audit, still shareholders are buying shares. So we cannot call AGM. So director will appoint the first year. First auditor. Second, in case of casual vacancy, director's auditor passed away, or some law make auditor ineligible to act as auditor. So casual, all of a sudden, during the year. So director will appoint. Third, by government. Different people are there. In some countries, Secretary of State is there. As per department, someone is authorized. If shareholders and directors, yes, sorry, third case is also there. If shareholder do not appoint, then directors appoint. If shareholder did not utilize their right, then director appoint in any year. Okay. Now, if shareholder and directors both do not appoint within time prescribed by law, then the both cannot appoint, then Secretary of State will appoint, government will appoint. Okay, now leaving company as auditor. How? Under three ways, three possibilities are there. One, auditor do not seek re-election. That this year audit is going to complete. I am auditor. I inform in writing that I do not want to be reappointed as auditor in the next year. I'm going to goodbye. Very easy. So you can arrange your auditor for the next, year, someone else. Second, resignation. And the third is removal, forced removal. Or removal. These both are before year end. Auditor is performing audit. All of a sudden, sorry, I'm going to resign. I'm not going to continue. Force removal, company removes auditor by passing a special resolution that you will not continue audit. Leave. Both are before year end. So, under each circumstances, auditor has right. What are the rights of auditor? To submit statement of circumstances and circulate that. Statement of circumstances, why I'm going to resign. But if they are removing it, I can still submit it. That my version, you are removing me because of this reason. This is my view. Note down that. Bring it on record. Because removal is the worst thing and resignation as well. It means things are not normal. So right to attend meeting of shareholders and right to speak at that meeting with shareholders. That this is my version, my opinion. Okay, so students, that's end of it. Now listen, please. I'll be sharing with you the notes, and these things should be revised, what we have covered in the class. What I want you to do is, I want you to not waste your time. Instead, you should open the ACCA Study Hub at home. Let me open. Just 1 minute, please. Double A. FM, triple A. It is double A. It might be here. Yes, here it is. So basically, from here, we are doing these two chapters. Okay. So their quiz, chapter 1, you can do some at home. Chapter 2, some quiz you can solve. Okay. And if you want to read some topics, you can study from here for the time being. Okay. So we have done a few things from here. Yes. So I will cover these two in the next class, but in the next class, we need to continue with corporate governance as well. I'll cover this, solve some of the OTQs from the study hub, and practice. Yes, here practices as well. Yes, this one you can do. You must do rather. Note down, please. Practice OT revision cases chapter 1 and quiz as well of that chapter. Okay. So in the next class, if you have any point in any quiz, any questions, note down. I will discuss with your whatever your problems will be in these questions. So in the next class, I will cover these and I will be moving to corporate governance, very important topic. And listen, corporate governance is tested in every paper now in scenario question, almost in every second paper. OTQs, it was tested before, but now in the scenario, 4 marks, sometimes 6 marks. So we will have to solve that as well after studying in the next class. I hope you enjoyed today's class. God bless you. See you. Take care. Next Sunday, next Saturday. Okay?
Thank you.
Yes. Thank you. Thank you. Take care. Goodbye. Goodbye.